It's time to spotlight Disney, and for that we welcome in Kenneth Leon, Global Director, Industry and Equity Research at CFRA. There is so much to discuss here. First of all, the stock hitting a 4-year low. We went from Bob Iger to Bob Chapek, back to Iger. Where do we stand on Disney? I know there's the carriage dispute with Charter, which I'm feeling you can't imagine. The Hulu story, which will be moved up. But does it have the right leadership? Let's just start with that.
So this is Bob Iger, take two. Take one was a phenomenal track record of growing Disney with acquisitions. It's a new world today, and Bob Iger is now recognizing that he has to make decisions that are realistic about the business. And certainly here, part of this is restructuring, potentially selling legacy businesses, perhaps like ABC, or finding equity partners for other linear businesses like ESPN. But at the end of the day, the strength of Disney is really the Disney parks, the Disney brand, and trying to right-size and turn profitable in the next year, the Disney Plus streaming. So it's a very complex picture, and one for investors that we think have surrendered the view of growth and are now looking at Disney stocks, as we are, as a value opportunity with catalysts.
Okay. Let's start with what's going on with this carriage dispute. If you live in New York City and you wait all year long for the U.S. Open tennis, we can't watch it, okay? So I'll start with that. Fuming, I can't even express how upset I am about this. I'll have at all the folks who want to watch kickoff for college football. Huge game this weekend. We're just watching ABC. How long does this last, and what are they hoping to accomplish with this dispute? Do they think everybody's going to run and sign up for Hulu? Because they're not going to.
Well, I think the distributors, whether it's Charter or others, as cable providers, are saying it's too much as far as price increases. And then also, even when you look at ESPN, it gets increasingly more expensive as a cable viewer. On top of that, really is, even though sports has passionate viewers, it has become ridiculously very expensive for those mega venues such as NFL, NBA, Major League Baseball, Premier League. So I think there's a disruption there, but they both have to come back to the table, both the cable operators and Disney, because ESPN matters so much to subscribers.
Yeah, without a doubt, because I did get the ESPN app, paid my $10, and then it asked me 21 questions, and then it realized I had Spectrum and shut me out regardless. So then I canceled it, and I was out my $10, right? So I had this great ESPN app for all of 5 minutes, and you know the rest of the story. Is this a buying opportunity here? When you see the stock at this low, around $80, is this a buying opportunity quickly? Because I have a lot of questions for you.
We think it is, but it may not be realized in the next 3 months. We have a $105 target. The street, which was enormously bullish on the stock, well over 125 target price. And again, it's this real reality that this is a turnaround story, realizing on events the underlying value of Disney, which we think on the public stock should be about 105. So I think this is a buying opportunity, and the underlying businesses are still very strong for Disney as we speak to parks, or we think to the release of films after the strikes.
Yeah.
And then, of course, they got to make it right on Disney Plus, which is streaming.
Okay. So let's do some predictions, like a quick back and forth. How long until this thing with Charter gets settled, roughly?
I think it gets settled in the next 30 to 45 days.
30 to 45 days. Also, the partner for ESPN, is that Apple or someone else?
It could be any of the large digital media companies. Certainly, what Iger wants is still have control of that, and that means that maybe those who are interested in buying ESPN, there will be fewer takers. But in between that is Brian Roberts from Comcast said that they want to move up the discussions on the option put call of selling their 33% interest in Hulu to Disney. So you might see that one, Nicole, move quicker in the last quarter here.
Right, and that was my question to you about Hulu. Last but not least, for the Disney Plus streaming and all that, I mean, what's your final thoughts here on the big picture on Disney and where it stands there? Because the question, too, was how many of the Spectrum or Charter people actually have Disney Plus and such, and I'm not sure that they do.
It comes down for investors. You have to make money. You can call it free cash flow, positive EBITDA or earnings, but there has to be more transparency to the business model for Disney Plus and show that reaching a certain penetration or level of subscribers plus advertising, that they have an attractive business model. That not only speaks for Disney Plus, but also for all streaming competitors of Netflix, which is the largest scale and most profitable in the group. And we have a strong buy on that stock.
Okay, so there's a scenario where Hulu could be gone, ABC could be gone, and ESPN could be gone, all gone from Disney. Is that right?
We like that, and if that provides a source of funds, then management can certainly say that we will either buy back stock, start and renew the dividend, even if it's modest, and look for other tactical acquisitions for the new Disney franchise that I spelled out before.
Yeah. Kenneth Leon, it's great to see you. You know, if anybody goes to the U.S. Open, go Coco Golf. All right. Well, thanks, Kenneth. You're always the best. Ken Leon of CFRA.